I'm Oliver Sloup with Blue Line Futures here at the Chicago Board of Trade, bringing you today's Tech Talk, and we're taking a look at soybeans July. The month of interest still for us, even though the shot clock is winding down. Alongside this chart here, we've got the Grain Express. This goes out to clients each and every morning, kind of covering the technicals and the fundamentals, basically a roadmap of what we're looking at for the day. So since we got the soybean chart pulled up here, let's scroll down to the soybean section and look at some of the technicals. There wasn't a whole lot of fundamental news over the last 24 hours, so not a whole lot to write home about there. We're not going to fill your inbox with a bunch of fluff just because. I think the technicals and the money flow is really what we're focusing in on here going into tomorrow's export data. Key support, let's take a look at that. We had 4-star support listed as 857 to 861 and a quarter. These 4-star levels, whether it be support or resistance, are more or less inflection points, and I think represent good risk-reward situations. If you want to be long the market, we suggest buying into these 4-star support pockets. If we break and close below there, I think the tides might shift a little bit. You take your medicine and move on. But I think, again, a good risk-reward scenario going into 4-star support. And the low is 860 today, so let's see where this was kind of derived from. If we put a line right here, there we go. It's 860, 857 area was a big one for us. It was previous support here, new lows on March 12th. We broke below there, and then it was kind of a little bit of a breakout point. And a lot of interaction, as you can see, between the bulls and the bears, the buyers and the sellers here, where we saw this kind of peak of volatility. But then once things settled out, it became the top end of the range, really from the middle of April all the way to this breakout point in June. And we've retraced that breakout point from June, early June, June 4th, twice now. And we held higher lows from June 9th, which is very encouraging. And we continue to believe that there is more upside potential in this soybean market, especially if the fundamentals continue to kind of prove so. But we need to get out above technical resistance. We've got 3-star technical support, or resistance rather, 877 and a half to 882 and a quarter. If we can get out above that pocket, I really think this market has the potential to make a run at that psychologically significant $9 level. So if we can get out above this 877, 882 area, I think we can crawl back up here towards the top end of the range from March, back to where this gap was in the beginning of March. That takes us closer to that psychologically significant $9 level. So again, we remain optimistic on soybeans. If we kind of retest today's lows and break and close below there, that would certainly neutralize our bias here in the near term. But until then, we remain optimistic. This has been Oliver Sloup, Blue Line Futures at the Chicago Board of Trade. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.